No, that doesn't exist. Like trouble doesn't exist. So here's the thing. Here's how I know like the shit is going to get real weird real fast. So this person, right? We've been together for 6 years. He's never cared about markets or finance or trading or stocks at all, right? Like I manage that for our household. He walks into the bedroom one morning. I'm just waking up. He's bringing me a cup of coffee. He's all excited. He hands me a coffee and he goes, "Hey, can you explain options trading to me?" I was like,
uh-oh.
Oh no.
Uh-oh.
No,
it's
no.
dangerous. It's
No,
dangerous territory. A lot of people at the block.
Crap. So
yeah, a lot of people at the block have been getting into some trouble with the options trading.
Yeah, I was like, look, do you have like 30 minutes? How much calculus do you know? Let me explain to you like how options pricing works and what you're actually buying. He's like, no, just like tell me what to buy. And I was like, dude, no. He's like, give me the ticker, give me the expiry, like just give it to me. And I was like, that's not.
Well, I mean, in this new world that we were talking with the Trading Views. Pierce Crosby.
Yeah, I love Pierce. I've known him forever.
Yeah, but the point of the conversation we had, was in this day and age where there's not much to do. You can't go outside. It's freezing outside. You can't go to sporting events. You can't do your usual routine. Why not day trade? Why not trade the market?
But look, this is part of, I think, like the larger narrative arc that's going on. And what's actually really fun and interesting for me is like my skill set and my knowledge is finally relevant and interesting to people. In the past, right, people had sports. There was all this shit going on and nobody really thought about money or markets other than people who worked in it or were interested in it. And now I think there are a few things that have happened at once. I think, first of all, trading technology is just much more accessible. You look at apps like Robinhood, Revolut, even Square now. There are a lot more ways for people to get access. There are a lot of mobile first experiences and they've been highly gamified as well. Like you look at the interface, I don't even know how to navigate the Robinhood interface. I downloaded it. I was like, I don't understand this because I'm used to trading on, a very different screen. But trading's become much more accessible, number one. Number two, there is a proliferation of really good free education and information. So I think TradingView is a great example of a tool people can use to do technical analysis, but you also have websites like Seeking Alpha, you have just Twitter, you have people writing Medium posts, distributing tons of great free content. And I think that's definitely been a big evolution. Like you used to have to pay for capital markets data and for research, and research is now effectively free, right? And then the third big theme we're seeing is this really interesting abstraction of the back-end platforms that are needed. So I call this sort of like turning capital markets into layers of software, right? So banking as a service is now much more prevalent. You don't need to build out the entire stack the way you would have had to in the past if you were building a brokerage firm. And I think that's really interesting as well. Capital markets are going to have their AWS moment, I think, over the next decade, where you're going to see people building really interesting, really innovative software where they may be leveraging a financial institution on the back end for all the licenses, et cetera, but they're offering a lot of new services to their clients through this really thin layer of software. Sure. That's pretty exciting.
It's a double-edged sword, I think, though, especially if you look at Robinhood as a case study and some of the issues, whether regulatory issues or technical issues, they've haven't had a smooth ride during this crisis. But we can get to that later. I want to introduce you to the audience because we've been live for a while. Meltem Demirors bringing the energy. Today on the Scoop remote, we're excited to have her, the Chief Strategy Officer of CoinShares, a European-based fund manager. We're excited to chat about all sorts of different things. I guess the first place to start would be with how business has been for you guys during this sort of rocky, tumultuous time for all markets, tied, of course, to that coronavirus anxiety.
Yeah.
I think I pinged you the other day on the twitter.com about inflows and outflows, and you sent me towards a link. I never actually looked at it. I kind of got distracted. Something maybe I was drinking one of these road rages, and and got distracted. But let's start there. Obviously, a lot of people are talking about the value proposition of Bitcoin.
I mean, can we talk about my shirt for a second?
Yeah,
so
exactly.
my shirt says long Bitcoin, short the world, which is basically my strategy right now in my portfolio. It's like, you know, a lot of financial pundits are talking about this. The only assets people are really wanting to hold long term right now are gold, digital gold, which is Bitcoin, and that's it. So long Bitcoin, short the world is sort of my synthesis of what's happening right now.
Yeah, I mean, definitely I think Bitcoin's getting more attention, but if you think about, I mean, CME Bitcoin futures volume kind of falling off a cliff, open interest falling off a cliff.
Yeah, so hold on.
In terms of, yeah,
okay,
in terms of the institutional state of it, what does it look like from your perspective?
Okay, so let's just do real talk for a minute. You know, I'd like to think that I'm a realist when it comes to Bitcoin. So I definitely believe in Bitcoin. I wouldn't have done this for the last 6 years if I didn't.
Clearly.
But I also think we have to be realistic, right? So here's realistically how I see it. Over the last 6 years that I've been involved in cryptocurrency professionally, right, building and running investment firms, Bitcoin has gone from being a joke to something people were scared of because it was used by drug dealers and used for money laundering on the internet, to being really exciting technology. I think Ethereum did a lot to advance that narrative just because it was more flexible and easier to program with, and people could build all sorts of stuff that wasn't necessarily easy to build with Bitcoin. So you saw this whole narrative around programmable money, right, of developing. And now the point we're at, it's still primarily a retail-driven movement. At CoinShares, we do 3 primary things, right? Basically, our view is there's this new asset class, this entire new industry that's developing, and we are capital markets people. We come from markets and trading. And so we've built a suite of products and services to help investors of all types access what's happening in our world, the world of digital currencies. So there are 3 ways we do that. The first is what we're best known for because it addresses a really big segment of the market, which is retail and institutional investors. Our exchange traded products are traded on the NASDAQ in Europe. People in Europe who have brokerage accounts can easily go into their brokerage account, type in the ticker for one of our 4 products. We have a Bitcoin tracker, an Ether tracker, a Litecoin tracker, and a Ripple tracker. Obviously, the Bitcoin product's the most popular, but really we're just trying to bring product to market that our clients tell us they want. So they can just type in that ticker and very easily buy exposure to these different digital currencies. There's no premium. The shares are created and redeemed in real time on a daily basis. There's no sort of funkiness there. And so it's a really efficient way for people to buy Bitcoin, have exposure to it in their retirement accounts, and participate. So that's what we're best known for, the exchange traded product. But what people don't know about us is we also have actively managed strategies that are focused more on institutional investors. That's the part of our business I'm focused on. So funds that manage a portfolio of cryptocurrencies. And right now, the big project we're working on is our venture fund, where we provide exposure to the venture ecosystem, particularly focused on sort of early stage, which is what I've done for the last 6 years. And then we also do some advisory work there. And then lastly, we have a capital markets business. We have a trading desk that historically has been proprietary trading focused, but is now selectively serving clients who are looking not only for OTC access, but we also have built a lot of trading software. In fact, last week I did a whole series on the development of trading software in the crypto space, but we're doing a lot of work in futures, in options, liquidity provisioning, but also providing people electronic access so they can trade on one screen. It's really geared more towards professional trading firms and financial institutions. And we've had to build this software because back in 2016, when we started building the ETP product, we had to integrate with NASDAQ on one end and then get Bitcoin liquidity on the other end. And there's not really a system back then that would connect those two. Now you have larger shops that are doing that, right? And you can see that with Fidelity offering crypto trading, with Bakkt, offering Bitcoin futures, the CME offering Bitcoin futures. But a lot of what we've built over the years, we're now utilizing in new ways to provide people access to the market via a single screen to provide efficiency and execution. And much like Citadel, let them trade in our flow as opposed to trading against our flow, which is, I think, the model we see with a lot of desks in the space. So that was a lot. There's a lot of stuff
it's
going
interesting.
on.
Yeah, no, there's a lot. There's a lot to unpack. You guys definitely have your hands across various sectors of the market.
Okay, so here's the thing: we don't do a good job talking about it. So we're starting to evolve that. So you're going to see a lot coming out from CoinShares that talks more about what we're doing outside of just the ETPs. So I'm pretty excited about, the next few months, just highlighting more of what we're doing. And
I mean, you've got that broker dealer. You got that broker dealer license that we broke.
Yeah.
We can maybe talk about that, but let's start with the OG stuff because it is what people know you for, the ETNs, the ETP products.
Yep.
You talked about this being a retail-driven market, and even over the past month, I think retail has been the more bullish side of the equation, whereas institutions may be less bearish. So I mentioned open interest in CME futures sort of falling off a bit, and institutional interest, even on the OTC side, really driving a lot of the selling. How does that translate into the products you guys are managing? Are folks coming to you and redeeming, or are they not? Are they coming to you and saying, hey, I buy into this digital gold narrative? What's sort of the overview of that?
Yeah, so the way our product works and the way our business works is we don't actually interact directly with retail clients. The way we interact with clients is through their brokers, their RIAs, their wealth advisors. So it's sort of a B2B2C model, the same way that a brokerage in the US works, right? If I'm offering a product in the US, I'm typically not selling it directly to an investor. I'm typically integrating it with a platform and then offering it to that platform's clients. So we have done a lot of analysis on inflows and outflows. Every day we look at inflows and outflows into the product. One of the interesting things we've seen is that once people buy our product and put our product into their portfolio, they tend to hold it. So it's been interesting to see. It's kind of a set and forget strategy. And I think that's similar to the approach a lot of people use when they're getting into Bitcoin, is they'll start out and maybe they'll buy a couple of shares. And the analog in the US market where we don't have an easily accessible product is maybe people will buy a couple $100 of Bitcoin and put it in a wallet, right? Or they'll hold it on an exchange. And they'll kind of sit and they'll watch Bitcoin go up and down. They'll read more about it. They'll start getting active on crypto Twitter. And really, they start that process of educating themselves. So for a lot of our clients, it starts with, hey, I've heard about this Bitcoin thing. Here's this product. It's already in a place where I have my money. It's offered to me in a way that I feel comfortable with, right? A lot of structured products, really about putting a wrapper around things to make it easy for people to manage. If you want to buy exposure to gold, for example, you're not going out and buying a gold bar in most cases. You're buying a gold product that is in this wrapper that makes it really easy for you to have exposure to the price of gold without having to do all this other stuff associated with like figuring out how to get your hands on some gold, put it in a vault, like keep it safe, all of this stuff. Same kind of analog with Bitcoin. And I think, it's a result of the fact that this is new. People don't understand it. People don't feel comfortable with it. So what we see is people buy it, they put it in their portfolio, they hold it for a while. The reason we do a lot of our research and so much writing and publish so many reports is really to help bring people along the journey we're going through, where, all of us are still learning about Bitcoin every day, even people who have been in this industry forever. I think there's this really fun chart that's sort of like a bell curve. That's people's knowledge level about Bitcoin over time. So when you start out, you're like, hey, I know nothing about Bitcoin. You learn and you get to this sort of point where you get kind of cocky and you're like, yeah, I totally get Bitcoin. And then as time goes on, you're like, actually, I know nothing. So this is called the wisdom of Bitcoin. And so a lot of our investors will add exposure. Maybe they'll buy another product. Maybe they'll buy the Ethereum product. Maybe they'll get interested in other digital currencies. And I think for a lot of people, right, the idea really is let's give people an easy, simple, safe, trusted starting point. And then from there, they can kind of choose their own adventure. They can go on a trading platform and trade cryptocurrencies and buy, the long tail of digital assets, that other 30%. Some people choose to focus on more active strategy where they say, hey, I want someone to manage my exposure. And there's now a lot of different managers offering different strategies. Some are statistical arbitrage, some are quant, some are opportunistic, some are like a blend of venture and trading. Then you have people who might say, hey, I actually want to hold my own Bitcoin. This whole narrative around self-sovereignty and be your own bank really appeals to me. So those people, will maybe buy a hardware wallet. Maybe they'll get set up with a Casa or on-chain capital account where they're doing their own multi-sig key management. So there are a lot of different ways. There's sort of this whole spectrum of ways you can access Bitcoin. We're focusing on kind of that entry point, top of the funnel, if you will, to help people get exposure and access in a way that's regulated, safe, secure, trusted. Those are really the associations we're going for.
We've seen people use I wouldn't call it an equivalent product, but it's what we have in this market with GBTC. We've seen people use that product within their investment retirement accounts, ways to allocate into that, get exposure to Bitcoin. Is that equivalent with what CoinShares has? Like in the UK, can people use or buy your products with their retirement accounts?
Yep. So we're very different from the Grayscale product. I used to work at Digital Currency Group. Love that team. Love the Grayscale team. Our product construction is totally different, but yes, the concept is the same. People can buy these because it's offered on a normal brokerage platform, because it's already integrated into these places where people are managing their retirement accounts. People can buy them in their retirement and their tax advantaged accounts. I think that's the importance here. And then the other piece is, one of the things that's interesting to kind of think about.
Wait, can we break down that tax bit for a second?
Sure.
What is it? You lost me.
Okay, sure. So I can use myself as an example, right? So let's say, for example, I'm in my mid-30s. I'm socking money away in a 401k, which is pre-tax. But then there's also IRA options on the post-tax side, right? So, and the idea is, say, for example, that I am an active trader and I'm trading Bitcoin and other digital currencies, and I want to keep that exposure in a tax advantage account because I don't want to have to be calculating and paying capital gains tax every time I trade. A really great way for people to manage that and to take advantage of these retirement sort of accounts and the tax opportunities there is to do that trading in a tax advantaged account. Now, you can't access that money until you reach the threshold, right? So typically it's age driven, and then there can be some tax implications when you take money out of the account. But basically, it's a way for you to grow the value of your portfolio without paying capital gains taxes. So for me, for example, I use a service in the US called DAME, Digital Asset Investment Management. They offer a SEP or a self-employed program IRA structure where I can trade on Gemini, who's what they partner with, in my SEP IRA, which is post-tax dollars that I can trade in a tax-advantaged way. So I can grow the value of my crypto portfolio without having to worry about paying taxes and losing a lot of my gains to the effective capital gains tax. And then obviously, just given some of the challenges around tax reporting in the crypto space anyways, it reduces some of the complexity, especially if you're someone who's taking advantage of opportunistic changes in the market or looking to adjust your exposure over time. So that's sort of the idea here.
That's one of the advantages the product has as it's structured.
Yeah, and I think that's something that's growing rapidly. There are a lot of different people who are working on ways to help people get Bitcoin and digital currency exposure into their retirement portfolios. And then I'm an investor in a platform called Alto IRA that's helping people get stuff like venture capital investments into their retirement portfolios. So just generally, again, I think it goes back to this idea of the investment landscape really changing. Alternatives are growing as an investment category. I would put crypto, pretty squarely in the alternatives category right now, although we're seeing a lot of trading happening in commodities and FX shops right now as well. I think that's more of the professional trading that's happening. But generally, I think there just has been a really big shift in how people perceive their portfolio, the types of assets they want exposure to. And I think we're going to continue to see that, especially given what's happening in equities markets, what's happening in bond markets, and just the shift we're seeing from passively managed portfolios of, buying indices and ETFs to people now thinking about, well, maybe active management and focusing on value investing is actually the way I should go. So
yeah. I mean, it's so fascinating how many different dynamics are playing out in this market that didn't play out. I mean, certainly over the course of the bull market, but even back during the financial crisis, and people are definitely gripped by a lot of these different dynamics. We certainly are at the block, as I alluded to. We are glued. We have diverted a lot of our attention away from the Bitcoin world and are often, looking at equity charts and what the S&P is doing, and are just in shock, right? We're like, how did the S&P end today up when we saw this data point? Or how did it end the day down when we saw this data point? And a lot of it doesn't make sense. And I think a lot of Bitcoiners are kind of confused about the fact that you have gold at a 7-year high, right? And Bitcoin has effectively acted as some sort of weird derivative on the S&P.
Okay, but hold on. Let's talk about the other side of Bitcoin, right? So you've got retail buyers and you've got people adding Bitcoin to their personal portfolios. But if we think about this narrative we've heard really since 2018, the institutions are coming. Let's just talk quickly about what that means. So today, if we look at sort of the wealth that's in the world and how people are investing that wealth, retail is one small portion, but there's a lot of money in institutions, pension funds, endowments, and sovereign wealth funds are what kind of makes up that bucket. And a lot of them don't have exposure to Bitcoin yet, or if they do, they have it in the high risk part of their portfolio. So you have to go back to kind of a Markowitz portfolio construction model. So what you think about when you're constructing a portfolio for long-term preservation of principal plus growth, right, is you're thinking about how do I build a portfolio where I have a mix of low risk assets, high risk assets, and different durations, right? So I have some stuff that's shorter duration and some stuff that's midterm duration and some stuff that's really long duration. And so as you're constructing that portfolio, right, typically you would have money market funds, bonds, treasuries in sort of the low risk bucket. You'd have equities, corporate bonds, maybe munis in that mid risk bucket. And then you'd have alternatives, private capital markets, PE, venture, real estate, et cetera. Real estate you probably would put in your lower risk bucket, although now that may have changed, which would be interesting to dig into. But then you have like the long tail of VC, PE, things like this in your longer term, higher risk bucket. So you've got the spectrum, and I'm really, really simplifying it here. There's obviously a lot of nuance to this. Okay, so a lot of endowments and institutions and pensions that were buying into crypto were allocating to it from that high risk bucket, and they were doing it through venture firms. So, there are a number of firms in the market. Ours, there's Pantera, there's Polychain, Paradigm, name your manager. There's lots of folks doing it, and they have different theses and different approaches, but it's all in kind of this venture bucket. What we need to do, and what will be interesting to see, what we've seen in the last few weeks in the market is a sell-off of risk. In a time of crisis, in a time of uncertainty, what people do is they look at that portfolio and they say, how do I reduce my overall risk? Because all of a sudden, right, the riskiness of a lot of stuff in your portfolio has just gone up a lot. And so we saw people flee the market and move into cash. I think the peak of the sell-off was March 23rd. Right. And since then, we've seen people deploying capital back into the market. But perception of risk has also changed. Right. And the profile of return that you can get for every dollar of risk you buy has also changed. So there are two important things to just think about. The first is what's the market rate of return, and then what's the risk-free rate. So the risk-free rate of return is basically the rate of return I can expect taking very, very, very little risk, as little financial risk as possible. Historically, that's been the overnight lending rate, right? So LIBOR is a great example of this, but the overnight rate has typically been the risk-free rate in a market. That just went to zero. It's zero now. Okay, so what is risk-free in this new world? We don't know, right? But basically, a bunch of people are looking at their portfolios. A bunch of banks and financial institutions are looking at their business models, and they're saying, holy shit, this thing I used to think was risk-free is a zero, and I don't know what else to put in here. So that whole bucket has changed. The perception of risk in REITs and real estate has changed because all of a sudden we're seeing a cascade of defaults starting to hit. And I think the real estate bubble is going to take a long time to play out, but it's starting to happen and you're starting to hear about it. And then you look at equities, right? Equities that people have historically considered to be safe, blue chip stocks, all of a sudden are really volatile and really risky.
Yeah.
And credit markets, with the Fed stepping in with their actions over the past month.
So everyone's kind of looking at the construction of their portfolios and they're rethinking, they're readjusting. I think Ray Dalio, for example, Ray has talked about this a lot with his focus on gold and this narrative of cash is trash. You see other folks talking about, how they're putting Bitcoin in their category of kind of like low to medium risk assets and treating it as a separate part of their portfolio, their allocation, similar to how they would view gold. So I think there's this interesting shift that's happening in the investment landscape where there's a global repricing and a reweighting of everything because risk has fundamentally changed. And so what's interesting to me is like we have this really interesting setup for Bitcoin. I've been talking about Bitcoin for the last 7 years. People are probably tired of it at this point. I know my family's definitely tired of it. They're like, Meltem, please shut up. Nobody wants to hear about Bitcoin. And then I just put on this shirt and they're like, God damn it. This is a Wendy's. That's what I say to you, Frank. When I start going off on Bitcoin, I'm like self-sovereignty, Bitcoin, like monetary hardness. People are like, Meltem, shut up, please. But finally, this is really relevant because the world that Bitcoin was designed for, the narrative that we've been talking about in our little bubble, in our little, corner of finance, if you can even call it that, it's like some weird internet pocket, is finally in the mainstream because all of these things we've been talking about, the entire value that Bitcoin brings is playing out in real time. So you could not imagine a more perfect setup. So to me, what happens over the next week, what happens over the next month, what happens over the next year and the years after that, this is Bitcoin's true test. And the question will be, nobody's going to convene.
But is it failing the test right now?
No.
Or is the jury still out? Why hasn't it failed the test if you look at the data over the past month?
Because look, what I think people fail to understand is the arc of time is very long. And if we're talking about change takes a very long time because people's mental models changing takes a long time, right? We have all of this information that's just come out. And right now we're all scrambling, right? People are scrambling to adapt and they're just reacting to the fire that's in front of them. They're not thinking strategically. They're just reacting to what's happened because it's surprised a lot of people and a lot of stuff is blowing up. There are a lot of fires to deal with. So right now people are in reaction mode. Once people get out of reaction mode and we start looking realistically and analytically at the future, I think that's when you start to see people saying, wait a minute, do we need to talk about Bitcoin in our next investment committee meeting? Do we want to take Bitcoin to our IC? Do we want to look at our risk mandates and see if maybe there's a place to carve out an allocation for this thing that we're interested in and we now think is relevant in this new reality we live in? That has to happen, and that's going to take time. It takes, I think of some of the people I've been talking to for the last, 6 years. There are some institutions, there are some investors, I've been talking to them for 4, 5, 6 years. And they're just now getting to the point where they're like, okay, maybe we're going to do something at the institutional level about our conviction around Bitcoin. But that takes time. There's a lot of process. There's a lot of analysis that has to go into it. And I think, again, like people in the Bitcoin space are very impatient because we move very quickly, but the rest of the world does not move at that pace. And again, I think when people do start deploying, and what we've seen so far, it's really in trickles, right? There isn't like one big moment that's going to happen where all of a sudden every institution in the world's like, we got to get Bitcoin. It's going to be a slow trickle. It's going to take 5 years, 10 years, possibly even another 15 years. Because it just takes a long time for people's mentalities to change. And there's also generational shift in leadership that needs to happen. A lot of the people at these institutions, like their view of the world was shaped in the 1970s and the 1980s. They're not living in the reality that you and I are living in as people in our mid 30s who've now lived through 2 financial crises, right? So I think it's going to take time, but I don't think the narrative around Bitcoin has changed. I think it evolves just as it has over the last 10 years.
I thought Mike Novogratz had a good point on his recent Galaxy earnings call this week. He said pretty much the same thing you're saying, Meltem, that This is crypto, more specifically Bitcoin's coming of age moment. But he also kind of caveated it and said later on in the call and said, if 6 to 12 months from now, let's say Bitcoin's flat to down and gold actually is at all-time highs, his thesis was wrong. And more along the lines of like, if not now, then when? I'm wondering, you're mentioning the 10 to 15 year timeline, why there's a difference there for some people, like why it needs to happen so much faster.
Yeah, look, I think professionally speaking, I want it to happen much faster because my livelihood and the financial well-being of our company, CoinShares, is obviously very much tied to our thesis playing out in the way we imagine. But realistically speaking, look, 6 years ago, I was leaving graduate school. I was like, I cannot go back to corporate America. I don't want to work over here in finance. And I decided to join a crypto company. And at that time, that was really high risk. And all my classmates were like, what's wrong? Like, what's wrong with you? Why are you stupid? And I took a gamble. It was an asymmetrical risk reward bet. And so far, it has played out well. Bitcoin is effectively an asymmetrical risk reward bet, right? It's either going to be zero or it's going to be not zero. It's binary, right? And for a lot of people, I think the success of Bitcoin means their financial success. So they're very invested in it. I think there's a very real possibility that Bitcoin stays relatively stagnant in terms of price for an extended period of time. There's also a scenario where it doesn't and it goes up dramatically because the halving's coming up. There's more demand coming in. There's going to be less supply, right? There are a number of different dynamics around supply and demand that we can't predict. All of the information I have, all the things I'm looking at would indicate to me that we are entering into setup where there has to be a positive impact on price because of the supply demand dynamics changing, right, with the halving. But that may not play out. Again, I don't have a crystal ball. If I did, I would not be working. I would be very rich and I would just hang out on a beach and talk shit on Twitter. Probably not even.
Claw margaritas.
Yeah, drink my clawgaritas. Warning, they're very dangerous. So look, I think for me, it's like, look, I have a lot of conviction in Bitcoin. I have a lot of conviction in Bitcoin's long-term role in our financial system and in the portfolios that we build to manage our personal wealth and our institutional wealth. I have a lot of conviction in that. I 100% believe that. So I'm super biased. But there is a world in which the thesis Mike has, a lot of other people have, we have at CoinShares, doesn't play out that way. I think every day that goes by, the probability goes up, right? The probability of Bitcoin succeeding goes up, but it's not a sure thing. So again, I think you just have to be prepared for those realities. But I don't think there's any possibility that the cat goes back in the proverbial box, right? I think that, is that the right idiom?
I don't know what that means. The cat going back into the box? You mean the toothpaste going back into the...
Yeah, what's the idiom?
Bottle. You're thinking like Schrodinger's cat.
I don't know where that came from. The clawgaritas are still in my brain.
Still clouding your
okay, so the toothpaste, to make a metaphor. The toothpaste doesn't go back in the tube, right? The ideas, the technology, the principles of Bitcoin, Bitcoin to me is, yes, it's an asset, yes, it's a technology, but it's also a social movement, right? And in a way, it's almost like a religion. We have our disciples, right? We have our converts, people talk about their moment, their Bitcoin moment in a religious sort of way. When you go to Bitcoin conference,
I wonder if the gold bugs would be the Pharisees.
Maybe. Yeah. I think maybe they were the first wave and now the Bitcoiners are the second wave. We're the Scientologists, maybe.
Yeah, sure.
Possibly that's an unflattering analogy. But look, I think there is an element of belief and religiosity to it. And that cult is super strong and it's growing every day. So I do think that a lot of the things, a lot of the ideology is here to stay. And it's going to fundamentally change our future. I believe that 100%.
We talked about options to start this conversation, and you mentioned the fact that every day it exists, it gets stronger. So it's almost exhibiting negative theta decay. I don't know if Frank knows what that is, but
I have no idea what that means.
Yeah, drop some Greeks on Frank.
Yeah, that's why I'm here. I'm Frank's quant.
You are okay. Okay, so then if you're the quant, how do you price a Bitcoin option? This is a fun intellectual debate we have internally all the time. How do you price the Bitcoin option?
Good luck. Well, does it pay out in Bitcoin or cash? That's the whole other wrinkle.
Yeah, it pays out in Bitcoin, let's say.
Yeah, we'd have to look at Deribit.
So look, and again, this is where we started the conversation. This is where, in the absence of a market rate, an RM, and a risk-free rate, an RFR rate, it's very difficult to price an option. And this is the interesting thing. And this is where data comes in, right? And information availability. And I know you guys talk a lot about data and data accuracy, data availability is a topic I'm really passionate about, because data informs how we price things, right? If we look at the market we're living in now, basically what we saw is people used really terrible data. And so a bunch of stuff was super mispriced. And so, and as a result, you're seeing like these really interesting dislocations of value and price happening across markets. But I think it's really interesting about Bitcoin is like, we're just in the early stages. We don't even have a good way to effectively set a risk-free rate in this ecosystem.
No.
Which is fascinating, right? The thought I've always had, I'd love to hear what you think of this, Ryan, is that the risk-free rate should be the credit worthiness of companies in this space. So if you could buy a basket of bonds from Coinbase, Deribit, BitMEX, Binance, it would effectively be
your overnight funding rate.
The overnight funding rate of those companies.
Not a bad idea.
Yeah,
it could be
what the rate that these exchanges are setting already.
Yeah, and that's already happening, right? And that's what you're seeing in the lending market that's developing in the crypto space. Anyways, there's so much territory still to be covered. There's so much still to be explored, but like people are paying attention. More and more capital is getting deployed, and more stuff's getting. I just think it's so fun. There's so many like fun intellectual wormholes to go into. It's like infinite.
There's so many new products to be launched. I think Arthur Hayes was talking about something around interest rate swaps tied to the market. You have new wonky derivatives coming out all the time, whether they're variance swaps or, new options.
What I've always said, we've been obsessed with technology engineering in this space for the last 10 years. The next decade in crypto is all about financial engineering, baby. And financial engineering is the best type of engineering because leverage is a magical drug.
But does it worry you? I mean, the size of the credit market right now in crypto growing as fast as it is, I mean, there are definitely
doesn't
concerns.
Worry. Look, Frank, we started this call by talking about how you and I engaged in like poor decision making around, having a few drinks last night and maybe falling asleep on our couches. People make bad decisions. Like, we're humans. Our limbic system dictates what we do, and we are like monkeys with a lot of hormones, and we like reward, and we don't think about risk in the right way at all. Like, we're not computers, we're humans. We're going to do all sorts of dumb, reckless stuff. And crypto has been a perfect sort of encapsulation of that. Like, you give people the tools. Some people build really great, really sound things, and some people build really reckless, like crazy shit. And the great thing about crypto is like, people can build it, operates 24/7. You can build all sorts of really new, really cool financial primitives. And so you're going to have people doing reckless things. And again, like, a market exists if there's a buyer and a seller. And if there are people who sell this stuff and there are people who want to buy it, like, I'm not the regulator. I'm not judge or jury or executioner. I get to decide what I want to participate in, what I don't want to participate in. Some stuff I'm definitely not going to participate in, but some stuff I am going to participate in, right? And so again, does it worry me? I wouldn't say it worries me. It entertains me more than anything else. And it intrigues me. It intrigues me. Like, I'm in this space because I find it intriguing. Like, for people who don't find it intriguing, for people who are not comfortable with it, they can buy an exchange traded product. They can go to Coinbase and buy Bitcoin. They can go to Gemini or Fidelity and, custody their coins there. The great thing about crypto is there are as many options as people have preferences, and it's really easy to build stuff for people's preferences. And so a lot of people are going to access it through safe, regulated, like, instruments and platforms, but there's a long tail of people out there who are crazy degenerates and want to live on the edge. They want that sweet, sweet dopamine. Let them have what they want. You know, that's the beauty of permissionless finance and permissionless systems. It's, you know, if there's a market for it, go forth and prosper, I say.
Well, I think to a degree, well, you're definitely revealing a bit about the way you view the world, and your philosophy about, you know, allowing people to sort of take on their own risk and live in accordance with their, you know, risk tolerance. But that sort of degeneracy that we see in the market might be what's keeping some people out. It might create some sort of feedback loop.
But look, we started the conversation by talking about this, right? So look at the world today, right? I could have zero knowledge of stocks or options, and I can open a Robinhood account and I can wreck myself. Similarly, I could know nothing.
Especially if you can get that infinite leverage, then you're all set.
But look, you already can. The fact of the matter is today, a person off the street can walk into a casino. They can effing remortgage their house and gamble with the value of their home in a casino. This is normal. This is something that's totally kosher in this country. I can go down to the bodega on the corner and I can blow my entire paycheck on lottery tickets. And I know people who do that shit. So like at the end of the day, as a society, there's a bunch of shit we allow that's really bad for people, like really, really bad for them. Look at cigarettes, look at alcohol. Like we give people the tools to either make themselves or destroy themselves. And again, what I take issue with is it's not a regulator's job to choose winners or losers. They shouldn't get to choose what tools of destruction or creation people have. What they should oversee is that ensuring that those markets are orderly, that there's transparency and information, and that there's sufficient risk sort of mitigation at a systemic level so that it
games
can't
be played fairly, right? Like
right. And what we have right now is we have people picking winners and losers, and that's not the role of a government. So maybe I sound like a crazy libertarian here, and I'm fine with that. But I think again, you know, there are plenty of options for people who want to go out and get wrecked, for people who want to gamble, who want to be degenerates. And some people are going to do that, and no amount of regulation or oversight changes that. At the end of the day, it's about the grift, right? Like where are the dollars? And the fact of the matter is lotteries, they fund states. They fund all sorts of stuff. Casinos, they fund, you know, a segment of the population that we all have massive collective guilt over. So like there is all sorts of ridiculous shit that happens in this world, and we find ways to rationalize in our brains why they should exist. Crypto is no different. I reject this notion that it should be.
So obviously you must be upset with the Fed right now picking winners and losers and buying, bond ETFs. We've never seen that before here in the United States, and junk bonds.
I think Novo actually said it best this morning. He had this great tweet where he was like, on Monday, the Fed's going to start buying baseball cards. And I was like, when are they buying my Beanie Babies? I have a lot of Beanie Babies that I'm in the red on, and I'd like them to bail out my Beanie Babies. Look, here's the thing, Frank. We all know that the system we live in, like it doesn't work. We have shitty governance at every level. And this goes back to what we were just talking about. There's an absolute failure of governance across the board. People don't have personal governance. Like people do not take responsibility for fucking anything in their lives. It's terrifying to me. So we don't have personal governance, and we don't teach people the tools to govern themselves, right? We don't teach people anything useful. Like we teach people cursive. Like how the fuck is cursive going to help someone? I'm sorry. It's not. So we don't teach people self-governance. We don't have good corporate governance, as evidenced by like the shit show that is unfolding in our markets, right? And then we have piss poor federal governance. Like our governments, our institutions have terrible governance as well. And so you take all of these failures in governments and you roll them together, and you are seeing the biggest display of stupidity that humankind has seen in the last decade, right? Like I have never seen so much dumb shit happen in such a short span of time, ever. And it's amazing because the level of incompetence this is revealing is astounding. Like, look at the World Health Organization. Look at the CDC. Like,
yeah. But I think some of the issues are kind of overblown, though.
The dumbest thing I've seen.
Yeah. Policy wise.
The dumbest thing I've seen is the bailout, right? Giving people $1,200 is like, that does nothing for people. And then bailing out failing corporations that are offshored and pay no taxes, like it makes zero sense. But again, the world is not about making sense. Like at the end of the day, we've really bad governance.
But it's not like '08. It's not like these companies need to be bailed out because of their own risky practices or mismanagement of their own capital. I mean, there is a health crisis.
I'm sorry.
There's a health crisis that airlines, for instance, the other day, 95%, the lowest air traffic is down, or not air traffic.
But Frank,
folks entering airports is down 95%.
Okay, but Frank, I disagree with you, okay? An airline using 96% of its capital to buy back shares, executives walking away with $5 billion of shareholder capital, of shareholder value at Boeing. Those are failures in financial management. Those are terrible practices. It's really bad governance, and we're bailing people out. We're teaching people that, hey, it's okay if you fuck up because Jay Powell's got you. He's going to go turn on the money printer and scoop some money into your cup. It's ridiculous.
Yeah, but he's kind of, I mean, the guy's damned if he does, damned if he didn't. Everybody was pissed off him for firing his, last bazooka.
His last ammo.
Yeah, his last ammo.
He ended up having a tank and all this other extra ammunition.
But look, I agree with you that
now they're mad that he's acting as the lender of last resort. I mean, this guy's got a tough job.
Yeah, look, it's a tough time, right? And the thing is, like, it is a damned if you do, damned if you don't situation. But I think if you look at the facts, right? If you look objectively at the facts and some of the things, the decisions people have made, they made really bad decisions. And this current situation, which is like 10 or 50 sort of standard deviations outside of anything that was expected, has exposed this poor decision making. So would it have happened normally? I don't know. Was it a ticking time bomb? I don't know, right? Like hindsight is 2020. We could sit here all day.
So what are the concerns though? What are the concerns though? People talk about inflation, right, being one of the issues that could, be one of the ramifications of some of this federal action. But I mean, inflation, even after what we've seen, is still at 11-year lows. You talk about folks not
forward expectations, but yeah.
Okay, so the biggest risk in my view, and this is really dollar specific, right? The dollar is the global currency of the world. It's the global currency, right? Everything is priced in dollars. The dollar drives the rest of the global economy. And so we are sitting here in a really interesting position because we have a printing press for dollars and nobody else does, right? It's going to be really interesting to see how this plays out with China, because China is really dependent on Americans buying stuff in dollars from China, right? So what's really interesting here is America has been in a position of monetary, of political, economic hegemony in every regard. You could arguably say America has been in a position of cultural hegemony as well, right? America has been the hegemon for the last, 70 to arguably 100 years. And what's going to be interesting to see is how is the world going to change? Because you have a small country of 330 million people, right, who dictate what happens to the other 7 billion people who live on this planet. That doesn't really work so well. And I think this is what you saw with OPEC, right? Like, there are a lot of people who are not very happy with the status quo. And the question is, like, what is going to change as a result of what's happening in the world today? A bunch of EM currencies, emerging market currencies, are going to have a really, really tough time. And we're already seeing that, right? Totally effed, excuse my language. They're going to have a really tough time. How are they going to respond? A bunch of developed markets are going to have a really tough time. The Eurozone is going to have a really hard time. China's going to have a really hard time. So what's going to happen in response to how this unfolds, I think is really interesting. And particularly how it shapes the political landscape to come is really interesting. And to me, the future, if the past was about competing for natural resources and competing for physical space, in my view, the future is about the digital domain. And this is where, again, like my interest in cryptocurrencies and all things networking related. It's really interesting. The battle for the future is going to be about digital supremacy, online supremacy in connectivity, connecting people and enabling communication and transactions, et cetera, but also in compute, right? So advances in computing technology, computing capabilities. And so what's really interesting for me to sort of think about is like America has decent infrastructure, but it's really not that good, particularly on the compute and connectivity side. And other countries are going to forge ahead and kind of start to win that race. And
this is a great point. I want to interrupt you because it's a great segue into something I think you're very passionate about. Folks look at
very passionate about a lot of things.
I know, from margaritas to monetary policy, they cover all the bases. But when we think about, or when maybe folks in China or people who pay attention to that market think about how they can, chip away at that dollar hegemony that you're talking about, the vanguard perhaps is this idea that they can digitize their currency. I think there it is, Ryan's back. Do you view that as being important, or is that sort of like is that a red herring, right? Is a digital dollar is not a panacea to taking on the U.S. or even defending ourselves?
Are we saying these words the right way? That's all I got to know. Like, how do you actually say it?
Panacea.
It's panacea. It's definitely panacea.
So hold on, before we go there, did you ever read Voltaire's Candide, the book that the word? Yeah, okay. Well, I guess the word predates the book, but the book popularized the word, I guess. Yeah. Great.
Pangloss?
Yeah, Dr. Pangloss. Yeah.
Panacea. Let's put the little chuck in there.
Let's do it. We're classy. We drink our clawgaritas with our pinkies out.
Yeah,
that's what's going on this. Okay.
So I think it's a good place to end. Like, what do you think about why are you anti-digital dollar? And do you think if China digitizes their dollar, it will help them take on our dominance?
Okay. Yeah, a lot to unpack here. So I'm going to promote for a moment. If people are interested in this, I write on Substack. I wrote a long piece on Substack about digital currency wars. So if we think about, the last 50 years, currency wars in the FX market, I think the future is going to be defined by digital currency wars. This is going to go into this digital realm. The fact of the matter is this, and I'll sort of start with this idea. Taking something and putting it on a blockchain or digitizing it doesn't change what it is. If you are a shitty company that has a hard time raising money, putting your shares on the blockchain is not going to make your company or your business model any less shitty. It might just make it easier for people to buy. Arguably right now, it makes it way harder. Again, taking an emerging market currency that has a really thin market and putting it on a blockchain or putting it on a managed database, a distributed database, which is really what a lot of these things are, doesn't change its form and function. The medium does not change the message. At the end of the day, what people want, what has value, no matter where you are in the world, no matter where you go, a dollar has value. People want dollars. So I don't care how many renminbis you digitize or how many bekongs you digitize, name your currency. I don't care what blockchain you put it on. I don't care if it's the best blockchain with the most scale and the most transactions and insert jargon here. It's not a dollar. And so the interesting thing is I do think the digital renminbi is sort of the crowning glory of the Belt and Road Initiative, which is China's effort to own a lot of physical infrastructure. And if you insert into that the fact that a lot of that debt is denominated in RMB, and then you also layer in the fact that now they're going to deploy RMB in sort of with their trade partners and in all of these places where they own infrastructure, it makes a lot of sense. The real question is what do people want to hold? It's the same story we have in the crypto space, right? Why does Bitcoin have market dominance and by such massive weight? Because the majority of the reason that people shitcoin is to get more Bitcoin. That's it. ICOs were a great way of transferring Bitcoin from early holders to newcomers. That's what ICOs were about. In my view, it's I have this dog trash over here and I want that.
But it was fun. Those were fun times. You were into it.
Look, I think there were elements of it that, as I said before, right, there were elements of it that were definitely interesting and were definitely fun. Long term, I think it's a little bit of a zero-sum game, right? Because at the end of the day, what people really want to hold when it comes down to it, it's really Bitcoin. Majority of people are going to want to hold Bitcoin.
So you think a lot of people got distracted? And I mean, it's kind of an obvious answer to the question, but do you think maybe you got distracted?
Yes and no. I think for me, I was intrigued by it. I definitely spent a little bit of time on it, but it's not my focus. I think to me, Bitcoin has always been and will always be the thing that is the most interesting, because there's so many things that are unique to Bitcoin that you cannot replicate.
Right? Same thing with the dollar.
Exactly. And this is where I think this whole digital currency war becomes really interesting. First of all, these things have nothing in common with cryptocurrency. What I think is so funny is like every time people talk about a digital dollar, people like in the crypto space get so hot and bothered. They're like, oh my God, like we're going to put dollars on a blockchain and everyone's going to love Bitcoin. I'm like, that is not what we were talking about. It is the opposite of what we were talking about. The example I'll point to is Sweden, right? Sweden has digitized its money very effectively. They have digital krona. And the way they do it is a consortium of banks created a digital payment system, right? Super fast, used everywhere. I think 70% of transactions in Sweden now happen through this digital payment system that's owned by a bank. It's called Swish. Right? The banks also created a digital identity system. So the system called Bank ID is, surprise, surprise, also owned by a consortium of banks. So it's same, but different, right? This is like a phrase people use in Southeast Asia, same, but different. It's like you ask for whiskey, they give you Lau Lau whiskey, which is gasoline, and they're like, oh, same, but different. Same thing here. Like it is the same thing in a very different wrapper. Right? It's a kroner is a kroner. Putting it on a digital network doesn't change anything about it. And what I think is so funny is all these crypto people are like, oh, this is amazing. And I'm like, this is the opposite of what we were talking about. This is the intellectual antithesis of Bitcoin. And so I think that's been really interesting to watch. There's like so much cognitive dissonance. And I think a lot of people just do not grasp nuance because it's hard. It requires you to learn and like it's difficult and you have to confront your own sort of ideological contradictions. Like there are a lot of contradictions in my brain, a lot. And I have to work really hard to try to reconcile them, right? Like we all do. A lot of contradictions going on here. But that's a pretty basic one. But like the crypto Twitter sphere lacks the ability to have nuance, which is what really grates on my soul.
They also don't pick up on sarcasm, which really is, it grinds my gears. Not to
it does grind my gears.
The name of your former podcast. Yeah. Well, they're wound down. They're done. We'll have to have you more on so you can get your podcast fill.
I've been experimenting with like different formats for content. The other thing, I don't know if people actually want to hear what I have to say. This is my thing. Like, I don't have the hubris to believe that anyone really cares about anything I have to say. Mostly it's just me. Like the way what Grinds My Gears started, it was Jill and I just sitting there like spitballing and griping. And our friend Dan Held happened to be in the car. He was like, this is great. You should do this in front of people. And then Jill was the one who pushed me to start writing, actually. She's like, you have a lot to say. Why don't you just like write it and then you can share it with people? Yeah. So I don't know if people actually care about anything I have to say.
No, we'll share it. It doesn't matter. I think that like people should write and sort of share their opinions just for themselves.
Fun.
I think it's an important,
I enjoy it.
Therapeutic type of thing. Yeah, no, I mean, it was fun. You brought the energy. I am getting a little lightheaded after this road rage. This is 8.5%, and I haven't eaten.
Fasting plus lunchtime beer is the best. Also, are you in our Beer Coiners Telegram?
I am. I actually meant to share a picture yesterday, and I took the picture and I never shared it, and because I just forgot. But Meltem Demirors, Chief Strategy Officer at CoinShares. Thank you so much for coming on. Such an intense, fun conversation. Stick around, I think, right afterwards. Not the listeners, you, Meltem.
Okay. I'll be here.
But thanks, everyone, for tuning in. We'll have some more fun The Scoop remotes for you next week. And happy Easter to all who observe.